Welcome to part 3 of the evolution to self-dependence. Understanding tax benefits. In this module, we'll explore how to make the most of tax benefits when starting your business journey. From expense deductions to understanding how the right structure can optimize your tax situation, we'll cover key strategies to help you set a strong financial foundation. But before we dive in, a quick note. This information is provided as general guidance only and should not be considered tax advice. Everyone's situation is unique, so we strongly recommend consulting with a local tax advisor or accountant to ensure you're making the best decisions for your personal and business needs. Introduction to tax benefits when getting started. Welcome to part 3 of the evolution to self-dependence. In this module, we'll explore the tax benefits available to you when starting your business journey. From understanding deductions to setting up a structure that maximizes your benefits, we'll guide you through strategies to make the most of your early years. Key takeaway: tax benefits can make a big difference in your first few years, allowing you to keep more of what you earn and reinvest in growth. Setting up for success: choose the right business structure. Your business structure may have a significant impact on your tax obligations, benefits, and how they apply. Choosing the right setup from the beginning can help reduce your tax liability and provide long-term advantages. Depending on your location, structures like sole proprietorships, partnerships, or limited companies may offer different levels of protection and tax advantages. Note: consult a local tax advisor to understand which structure is best for your specific needs. Common deductions: what you can write off. One of the greatest benefits of running your own business is the ability to deduct certain expenses. These can include your home office, a percentage of your rent or interest on your mortgage, business meetings, business travel, professional services, and even part of your utilities. Knowing what qualifies as a legitimate deduction can significantly reduce your taxable income. Tip: keep detailed records and receipts for all business-related expenses. This makes it easier to track and justify your deductions if ever needed. The business owner's advantage: minimizing tax obligations. One key benefit that business owners have over employees is the ability to minimize their tax obligations. Through strategic planning, business owners can reduce their taxable income by leveraging deductions, tax credits, and structuring their expenses effectively. Example: an employee's salary is fully taxed, but a business owner can deduct legitimate business expenses like travel, equipment, and professional services before calculating their taxable income. This flexibility allows business owners to keep more of what they earn and reinvest it into growth, making tax planning an essential tool in their financial strategy. Early-stage tax strategies: maximize your cash flow. In the first few years, your goal should be to maximize your cash flow through strategic tax planning. Focus on deductions that reduce your taxable income, like depreciation on assets, startup costs, and initial investments. This will help you reinvest more into your business while keeping cash on hand. Example: accelerated depreciation on equipment can allow you to recover costs faster, creating more upfront cash savings. In some countries, you may be able to offset your tax loss in your side hustle against the tax you pay in your employment, giving you more cash in your hand each week. Managing business and personal expenses: where's the line? It's important to clearly distinguish between personal and business expenses. While it might be tempting to categorize everything as a business cost, maintaining accurate records and clear separation is crucial to avoid any issues with tax authorities. Tip: consider using separate bank accounts and credit cards for business and personal expenses. Don't let short-term tax benefits inflate your lifestyle. One thing to watch out for is letting short-term tax benefits lead to lifestyle inflation. It can be tempting to upgrade your car or increase spending when you see more cash flow from reduced taxes, but this is often a trap. Instead, focus on reinvesting those savings early on. Advice: consider using those extra funds to build a diversified investment portfolio or expand your business operations. Remember, building wealth is about making smart, long-term choices. Avoid the temptation to spend more now. Invest for your future instead. Tax-free allowances and incentives: don't miss out. Many governments offer tax-free allowances, grants, and incentives for small businesses and startups. These can include research and development credits, investment allowances, and tax-free startup funding. Explore these options early to make the most of available support. Example: some countries offer tax credits for hiring staff or investing in training and education. Building your long-term strategy, plan for growth. Think beyond the first few years and build your long-term tax strategy. As your business grows, consider how changes in structure, revenue, and investment plans will impact your tax situation. Regularly review your strategy with your accountant to optimize for long-term success. Final thoughts: stay informed and adaptable. Tax laws change, and your business will evolve too. Stay informed about tax updates and be prepared to adapt your strategy as you grow. Remember, the right tax planning isn't just about saving money. It's about building a sustainable, resilient financial base.